What's up, guys? Feeding you information here. If you're a new viewer, I am an informative channel with a personality. Today we're going to be talking finance. More importantly, we're going to be talking about the cell phone service industry and how T-Mobile Inc. is the best stock in a bad sector. That sector being the wireless cell phone services. Over the past few years, there's been one clear winner in the U.S. consumer wireless industry, T-Mobile. T-Mobile stock has risen 450% in the last 5 years and 120% in the last 3. In the entire space, T-Mobile stock stands alone. Look at 3-year returns, for instance. Sprint Corp has gained 31%, AT&T, Verizon, United States Cellular Corp all have posted negative returns. To be fair, AT&T and Verizon shareholders have made modest profits, including dividends, but very small profits, guys. Like, we're talking like 40% gains roughly over, the last 5 years, which isn't really anything compared to T-Mobile's. The performance of T-Mobile stock in such a challenged sector truly is impressive, and it is a challenged sector. He reiterates. I argued just last month that AT&T stock is not the dividend stock too many investors believe it to be. I'm not impressed with Verizon stock either, and back in February, I even wrote that I'd avoid T-Mobile stock, which at the time traded just above $60. With T-Mobile back at similar levels, I'm still not compelled to jump in. T-Mobile and CEO John Legere have done an outstanding job over the years, while Sprint's takeover's hopes apparently dashed. T-Mobile stock looks like the best pick in the sector. Now, with that being said, I just wanted to take a look at its actual stock. It's valued at $60.15. The last month has caused it to go down almost 6%, which now makes it down 5% for this year. So if you were to swing trade this, I think you could do pretty well, actually, because I do think it'll recover from that and it'll push boundaries with that, as well as possibly hit $70 or higher, because it's it's really promoting Netflix. Due to the fact that if you transfer from AT&T, Verizon, Sprint, any other cell phone company to T-Mobile right now, they partnered with Netflix, so you get a free Netflix account for, I believe, like a year or something like that, which is really awesome. So that's really helping them promote and just probably increase their overall services and revenue and profits. And of course, Netflix is happy because now they have someone else adding to their views, which helps advertisement and all that stuff and profits. But yeah, so based on speculation, if we go ahead and look, so this is complete speculation right now, and speculation is fine if you're going for a day trade or swing trade, but it's up to you if you wish to do so. Now, it's valued at a PE of 11.5. Now, that is about 12 points below the market. It's got a market cap of 51.62. It doesn't have a dividend yield, so you have to factor that in. The only way you're going to profit from this, guys, is if the shares itself raise. Its last EPS was predicted to be a 0.37. It actually posted a 0.48. And as you can see, too, I wanted to point out how the last 5 quarters pretty much, so quarter 4 2017, quarter 3, 2, 1 of 2017, as well as quarter 4 of 2016, they blew out earnings expectations, so analysts just couldn't keep up. Whereas Verizon, as you can see, their quarter 1 for 2017, they missed earnings. They matched their quarter 2 for 2017. Their quarter 3, they matched. And their quarter 4, they missed earnings, so that looks pretty crappy. AT&T went right by it, sorry. They missed their Q1 earnings. They did beat their Q2 earnings. They missed their quarter 3, and then they did destroy their quarter 4 earnings. Apparently, just based on their last earnings, I feel like analysts were being a little bit too rough on them. AT&T still is a pretty dominant service in itself, but its stock just is not looking that great. If you check out their last year, they're also down about 6%, so they could be a good swing trade as well if you choose to. But let's go back at Verizon too. Let's see how they are. They're actually up 6%, so I wouldn't even bother to mess with this stock currently, because if they're up for the year and down 3.5% for the month, but I don't know. Verizon was not one that I would really go after for a swing trade. I would say Verizon or AT&T. If you're a long-term investor, definitely go after them. But this is why the video was more about T-Mobile, for the fact that I do think they would be a great swing trade coming up in a very bullish market, as we've started off with. It keeps dropping, it keeps going up, it keeps dropping, it keeps going up. So it's kind of a recover game, and this would be a perfect stock. And yeah, so based on speculation, you would buy. Thank you so much for watching. This is Feeding Information. If you enjoyed the video, please leave a like. Make sure to subscribe. Tons of more content. And I'll see you guys in the next one.